It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, February 24th, 2016. We got another jam-packed newsletter in store for you guys and gals tonight. We got crude, S&P, gold, and the euro kicking it off tonight with crude oil. The oil market is bullish and trying to complete a measured third leg higher this evening. We get a short-term trading range that tells us the best trades are going to come after a bear trap at the lows. We got a good chart to look at for you guys and a good plan for the oil traders for tomorrow, Thursday's session. E-mini S&P, the E-mini is bullish on its way to completing its own third measured leg higher today. This tells us to look for pullbacks on the way higher, but also to look for a reversal after the target is achieved. We are right there. Everything hinges on that third level overhead. We're going to take a look at that chart in a second for the E-mini traders out there. Gold up next. The yellow metal on gold is bearish after collapsing off today's highs, and the recent overshoot of a channel low tells us to expect a bullish correction before the sellers try to finish the job back to today's lows. Wrapping up tonight, we have the euro. The euro currency future is bullish with a recent double overshoot of the channel. This tells us to look for a measured correction off the highs for the best buying opportunities tomorrow. We get a little slice of resistance in our way, but we're going to be right about where we need to be on the euro, looking really good for a setup going into possibly the overnight Asian session into early London for tomorrow. We get a really exciting, real busy newsletter in store for you guys. A lot to cover tonight. Before we jump into charts, though, I do want to remind you, the only place to see the whole full-length newsletter video is right on our trading blog here at sidewaysmarkets.com. If you're watching this video right now on our YouTube channel, it's only the partial. Make sure you follow the link right in the description of the YouTube video and come join us here at Sideways Markets. While you're here watching the full-length video, don't forget to grab your free pass in the upper left-hand corner. I would love to give you an invite, free pass. Come out and test drive our live trade room for a few days this week or next. Grab your free pass in the upper left-hand corner. In the lower left-hand corner, right above my ugly mug, you'll see a spot to register for our nightly newsletter mailing list. You'll never have to worry about missing another newsletter ever again. Give me your name, your email address, and then check your inbox. I'm going to send you a verification email, and then I'll email you every evening when the nightly newsletter is ready to be watched. Right below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. Grab the charts by following that link right below the video on the blog. Over on the right-hand side, don't forget you can register as a brand new trial member, learn more about our strategies. You can learn more about what it means to be a member. And don't forget, we've always got someone standing by 24/7, 365 to answer all your questions. Getting ready here tonight. Hope you got your helmet. It's been a wild week so far. This is what we live for day traders. I'll tell you, I'd hate to have to have a job, have to track this stuff over weeks. It's been up and down and up and down. Beautiful for day trading, but boy, oh boy, we'll try to make sense of it here over the long run for tomorrow. Taking a look first at the calendar for tomorrow, February 25th. Thursday, last Thursday of the month of February. We've got durable goods at 8:30, jobless claims at 8:30. That's pretty much all we got to worry about for the markets we'll be talking about tomorrow. We do have natty gas at 10:30. Not going to be too big of an impact for any of these markets. But we do have tomorrow morning two major news events. Both of them are Red Star news. The manufacturing numbers are under heavy fire right now because of the dollar being such a high price right now. So durable goods will definitely be on everyone's radar tomorrow morning. Jobless claims are kind of meh. They're not really the most important news report we see on a Thursday morning. It's a Red Star news report, but it's been a number of years, ever since the whole credit crunch here in 2008, 2009, and pretty much the jobless number became irrelevant. The new report now is the JOLTS report, which we'll hear next week as well, along with non-farm payrolls next week. So major news tomorrow morning is going to be the durable goods orders at 8:30. It's all lumped in at 8:30, so be ready. Set your 5-minute reminder, 8:25, and then we'll be sitting on hands until shortly after 8:30, and then we'll be cranking away from there. Set your reminder 5 minutes before. Make sure you avoid trading into that news. And, of course, a full day tomorrow. Yep, full day tomorrow. Last few drops of this last week, the month of February. I can't believe we're going into March next week. Anyways, enough about that. We got to worry about tomorrow first. Let's jump in, starting out with crude. We got crude, S&P, gold. And we might just finish up with a bit of euro this evening as well. Starting out with oil. Crude oil is bullish and trying to complete a measured third leg higher this evening. Yeah, third leg higher, 2 days in a row, with a short-term range that tells us the best trades will come after a bear trap at the lows. Now, we have two channels, 3 legs higher, and a range to work with on this chart. Okay, first of all, the channels give us support and resistance areas. This is a bullish market. They'll give us support areas to look for buying opportunities. The range gives us an easy location to look for bear traps, and the measured move gives the buyers an easy target overhead. Now, keep in mind, if we make those 3 legs higher, let's say, for example, before we come in tomorrow morning, we'll open up our trade room tomorrow morning at 8 a.m. Eastern time, by the way. Once we get to that third leg higher, we expect to see significant profit taking from the buyers and a deep correction off the highs, which will give the sellers a chance to reverse the direction back down, most likely to those major channel lows. So, digging into this chart here real quickly, first of all, the most important channel that I see right now is this channel coming right up, right through the middle. It doesn't look like it's the most important, but it's the one that has the best fit right now. And I say that because you can easily see rotation, 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 right? So bottom line is the low of this channel acts as support, right? And the high of the channel will act as resistance. Pretty important, right? Pretty important information from there. Okay? Now, also important that we understand that this major channel, now, the reason why this major channel is not as important is because we don't have good rotation yet. We start from the low. We don't complete the rotation all the way to the high, right? We double bottom off that low, so we're not getting a very good rotation there. But we definitely can see, though, that we finished the job up to the high. Now we're expecting to see rotation back down to the low. The fact that we haven't seen consistent rotation tells me this channel is probably not going to be used by the mass amounts of people, right? And because we're technical traders, we want to look for areas of interest that other people are going to be seeing. This is probably going to be acknowledged by maybe a third, right? Maybe a half of all the traders in the market right now, right? It's not really the best looking channel. I'm sure, though, that if we were to go down to these lows, I'm sure you'll see a bounce there, right? But it won't be the most important channel on this chart right now, right? So just be aware of that. Channels have to look good, and this one, although it does, what really gives it away is you can see the midline. The midline, you can see they were really kind of they were kind of looking for something. It feels like right here they were looking for some sort of support, right, to buy off of, whether or not it be the low of that range or the midline. But the midline looks good, so that tells me there are traders out there using this channel right now, right? And so we know, of course, the low of that channel, right, is going to be excellent support, right? It's going to be a while before we get back down to those lows, though. So we got some time on that. Just be watching that major channel low. Okay, the next piece of this puzzle is going to be, we got 3 legs up, right? 3 legs up. 1, 2, and 3. We talked about this today in the afternoon trading session with our guests. We talked about this today in our trading with our members this morning. We've seen a lot of this lately, right? 3 pushes up. Now, 2 pushes usually results in some profit taking. As you can see in this example, though, it didn't stop this runaway market at all after inventories came out this morning. So we're expecting a 3rd leg higher here. Usually, not always, there's never any guarantees, but usually when we see a measured move like this completed, and then they just blow right through it, and then here's the funny part, they actually use the measured move as support. We're probably going higher, right? We're probably going higher. So the 3rd leg now puts us right up in this area. There's really kind of a range here. People draw the 3rd leg a little bit differently. So I would expect a range here between this 71 and 85, right? That's going to be kind of the target area for these long-term buyers right now. I say long-term buyers because short-term buyers are going to want to wait for that range trap at the low. Next thing here, we get that trading range. This trading range, I think, is one of the most important clues we have on this chart because it's going to give us an easy area of interest to look for another opportunity to be a buyer right now. Now, what do we know about this range? First of all, it is bullish going into that trading range. That means we have a bullish bias. What does a bullish bias mean? Looking for the traps, right? Look for bear traps. We're looking for the sellers to get caught on the wrong side at the low of that range, failure to buy the low, right? So a bullish bias going into that trading range, it tells us range rotation, low to high, high to low to high, back to the low, up to the high, back to the low. The ideal scenario here right now, at least in the short term, is going to be back to those range lows. Look for sellers, right? Look for sellers to try and fail and buy that low. Target will be back at the opposite side of the range, and of course, final target up at that third leg higher. If we happen to push higher, I always like to look for a breakout pullback, but I have a very different way of looking for a breakout pullback. I'm looking for it to pull back, and I'm waiting now for short-term sellers to try to sell that high, and I'm going to look for them to fail and buy into their failure. Right? The typical breakout pullback is not as reliable as the good old days, right? I'm kidding with you. But it's not as reliable anymore. So that breakout pullback, although it may work, it's going to be a little bit less than reliable. The easier way to do it is wait for the pullback. It'll usually go a little bit up, right? Look for sellers to try to run it back to the low. If they do, look for the bear trap at the low. What I've been looking for, though, is to look for those sellers to, fail, right? And then allow us to buy into their stops. It's a little bit safer, right? Because you're buying up at that high, right? So breakout pullback, right? A little bit of a trap and stop run type of breakout pullback. I'll teach you guys more of that in our advanced course. And then, of course, a bear trap at the low. Remember, whenever you're dealing with ranges, right? What's the best pattern? What's the best technique around ranges? Failures, right? Seller failure at the low, up to the high, seller failure at the high, right? To finish off that measured move. As you can see right now, the channels provide us with support. The range provides us what I think the range is going to be the most important clue we're going to get in the short term, at least for tradable opportunities. And then, again, that final target overhead. Remember, measured moves. One last thing here about crude here. If we do finish off that measured move, it's very, very common that we see a double top into that measured move before we get the full-blown reversal. Don't get caught trying to sell that first test, right? The reason why that happens is because a lot of buyers aren't going to know it's there, and they're going to blindly buy it anyways. That market inertia, right, is going to take things up to that high again, but you better believe it, there are going to be some aggressive sellers looking forward to selling that double top, right on back down. And where do you think they're going to be targeting? Range low, major channel low, and of course by then we'll be trading tomorrow morning with all of our students. We'll update our charts at that time. All right, moving forward. You got a good plan for the oil. Let's keep going. Now to the S&P 500. Boy, oh boy, this thing gives you whiplash. Look at this thing. Don't even look left right now. Whatever you do, don't read those IRA statements right now. Do not take them out of the envelope. Keep them in there. You don't want to see what the heck's going on in your account right now. That is buying and holding long term, right, for all of you who have retirement accounts out there. I can't stress that enough. Do not look at that statement right now. Anyways, E-mini S&P is bullish on its way to completing its third measured leg higher today, which tells us to look for pullbacks on the way higher, but also it tells us to look for a reversal after that target is achieved, right? 3 legs up, exactly the same scenario we just talked about on oil. We have a channel, 3 legs higher, and a teeny little trading range to work with this evening. The massive overshoot of those channel highs, look at that overshoot, clearly illustrates how strong this move was today. And such strength typically gives us a big correction in the opposite direction. Now, 3 legs higher is a significant move for the buyers, which tells us there will soon be profit taking and a deep 2-legged correction off the highs. And the trading range set at 1919 gives those sellers an easy target for the correction off the highs. Now, let's put this all together. Couple important factors here. First of all, the channel. There's no other way to draw the channel. Remember, I talk about this all the time on the newsletter. Drawing channels, it's not an art, it's a science. There is a definite systematic approach to finding channels. We draw them a very specific way. I look forward to teaching you. I cover it all in my intermediate course, and we talk about the strategy for trading them in our advanced course. Next up, right, we see we have a big overshoot. This is impressive. You knew they were busting out some whoop ass, right, on this thing when it went double overshoot and didn't even pull back to the moving average.